Hello, my name is Eddie Tothpick. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris milling wheat and London UK feed wheat. I'll start with Paris milling wheat. As I've repeatedly stated at the start of this commentary, these many weeks, now months, that there are many things imperfect with this daily chart. However, I will strive on, and the latest imperfection is how the March-based bullish Andrews pitchfork, the super acute March-based bullish Andrews pitchfork, which admit I first drew, is still so right. It amazes me that the steep angle of attack has not as yet been compromised after nearly 2 months in operation. Now, admittedly, the lower tine has been breached, even perhaps broken, but it is still there. Especially, as I say, the lower tine shows the bullish angle of attack currently at 392.5. Anyway, as long as it works, I will stand by it. Prices are now well over the very recent 50% Fibonacci line at 367 3/4 and continue to move higher. Middle tine, currently 417.25, is the rolling overhead resistance, and next week this resistance will exceed the all-time high at 424 even. That was made back in March. Additionally, we are in a fairly free zone denuded of resistances, bar the round number at 400 even, which saw limited use back in March. Thus, onwards and upwards. One final thing I should point out. There is no weekly key reversal up here in the offing, as we have seen elsewhere in other wheat markets. London UK feed wheat. A lot less to go on here compared to some other markets, but we can still see some interesting things, and one key pattern has been triggered this week. The peak in late March has been the start of the latest pattern. As I've pointed out these past two commentaries, we have a late March, late April ascending wedge pattern, currently 317.40 to 331.5. This pattern is not the best ascending wedge pattern that I have ever seen. It does look a little scrappy, but it is still there, and since Tuesday last week has triggered the upside potentials. Now, assuming this is not a false break, which is an assumption, but a reasonable one at this time, we can therefore say that for this ascending wedge pattern, we can have a possible primary target X in the 344 even area, whilst the harder secondary target X1 is in the 353.60 area. Now, some caveats. Now you say there's some caveats? Well, there is one. Well, more than one, actually. Okay, so ascending wedge patterns perform poorly. And in the cases that they do work, they would usually need to achieve their targets within 10 sessions, as by then their bullish power in this instance becomes eroded. Additionally, this break higher with its limited movement upwards could still very well be a false break higher, so watch out for that, as any subsequent move down as a result will likely have a far stronger bearish force than this attempt higher, so watch out. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tothpick and ADM Investor Services International Limited. And here comes the final bit.